Good morning, everyone. It's Jared here from the Alpha Capital Group, giving you a very, very warm Friday update to wrap up the week that we had in terms of volatility, in terms of price action, and closing off the first full week of February. So this week, as we alluded to in our previous call on Monday, the big kind of focal points that we had this week was not alone kind of the price action on Thursday, but also looking at the price action this morning. So yesterday, the big mover this week was the CPI inflation print in the US. As we know, and as we did our kind of our research later in the mid part of this week, the inflation figures ran quite hot and they beat expectations. As a direct result, the indices across the board yesterday completely sold off. So the Dow Jones, the Nasdaq, the S&P 500 all went lower significantly at 130, and that was followed by the Eurozone late yesterday as well. So the DAX, the FTSE, all these other global indices all went lower in synchrony. Now, with the inflation print yesterday, we saw an effect across all markets. Okay, the dollar, there was significant movements in the dollar, both up and down. There was significant movements in gold. There was significant movement in the yields and the bonds as well, with the Treasury, the 2-year. And the 10-year moving significantly, with the 10-year Treasury moving above 2% for the first time in 3 years. So, and since before pre-COVID. So I suppose looking at the price action, we did moving across directly to the economic calendar. We can see here yesterday, the CPI print 6%. If we look at year on year, it ran very, very significant. It was both the core CPI and the core CPI and the normal CPI as well, both ran hotter. The consumer price index 7.5%. The core, which excludes food and energy, it ran at 6% as well. So both above expectations. And even as we see as well, the month-on-month figures were higher as well. So the inflation narrative is definitely staying in the markets. There was no relief yesterday, and all this attention now towards to the March 16th FOMC next interest rate meeting to see will there be a 0.5 hike. So the likelihood is at the next interest rate meeting that there will be a minimum of 0.25% increase by the FOMC in the US, led by Fed Chair Powell. But I think the big discussion point now is, will they go a little bit more extreme, and will they raise 0.5%? So I suppose the narratives now, commentary, looking at data between now and the 16th of March will ultimately be significant. So we should in theory have one more inflation figure before the FOMC in March 16th. So it'll be all eyes to see kind of how the inflation outlook comes on that, and obviously judging from there. So yesterday's CPI print definitely ran lower, which led to a lot of weakness. And then we saw that sustained weakness again in the US session towards the close last night. From 7 o'clock, we sold off right through the course into the close and closed below some of the key levels that was kind of looked at earlier in the week. Now, today's forecast this morning, we got a little bit of volatility this morning. Again, we had the German CPI data this morning, which came in pretty much as expected. So there wasn't a massive shockwave there. And in fact, the DAX actually did see a little bit of an upside recovery. Meanwhile, in the UK, the other data that we focused on Monday was the GDP in the UK, and that actually came in with a negative print as well. So I suppose if you look at there, the Q on Q GDP came in at 1%, so slightly below estimates, even though the year on year was slightly higher. So overall, probably not too much to report there in the UK, as nearly both of them nearly cancelled each other out. One was slightly higher, the other was slightly lower. So there wasn't a significant move in terms of the weakness in the pound this morning. So that wraps up the fundamentals really for the week. So next week we will be doing a preview on Monday for the fundamentals next week, going through everything in detail. But now let's quickly look at the forecast and the price action into this week's close. So as I alluded to on the DXY, the dollar, we saw significant volatility yesterday. And if you look at the shorter term price actions, you can see the volatility associated to the inflation figures yesterday. We sold off initially, then we rallied back. So we rallied initially, we sold off, and then we rallied significantly then through the course of the session. And the dollar index rallied from the 95.2 level all the way back into 96. So that was a nice intraday move when we look at the DXY. Now, more importantly, when we look at the indices, we can see this represented here. The S&P sold off this level again yesterday, repeating what I'd done last Wednesday, rejecting the highs from just under 46, and we sold off right through the course of the session yesterday into these pre-market lows this morning. And we have seen a little bit of a bounce this morning in pre-market, but that's logically, that's only natural. When you see a sharp knee-jerk reaction like this, where the price action sells off as significantly as it did, you tend to get a little bit of a knee-jerk reaction. Okay, we saw that same knee-jerk reaction yesterday in the shorter time frames when the price action sold off initially, and we got that a little bit of a pop before we started to sell off again. So this was more of a relief rally yesterday, and we saw this sell off then through the course of the session right through pre-market this morning, and we break through 45.50. Now, I suppose gearing up for the weekly close, my near-term focal point myself, without giving a kind of a clear indication, I'm focused really to see how does the weekly and daily levels, should I say, close off this 44.40, 44.50 level, because I believe that if the price action were to kind of break through this level, it does put a lot of pressure on the indices next week, more predominantly speaking. And given as well that we've seen this gradual sell-off, gradual pullback, we could well be in for more bearish territory next week. But meanwhile, in the short term, I'm watching the price action over the next 12 hours or so to see how does the price action close today in the US. Okay. Now, if we move to the Nasdaq, first and foremost, we can see the same again in the Nasdaq. We sold off from this 15,000 level yesterday, and we came back in to test these lower levels down here between kind of 14,500, 14,600 this morning. And we do have a key level here between 14,400 and 14,450. So again, like the S&P, I would be looking to see this level being taken out to allow the price action to continue descending lower. But at the moment, the price action is holding firm. So we may see kind of further choppy volatility today. So the daily closure today will probably give a lot of viewpoints or insights as to where the price action may develop and head towards next week. And last but not least, if we look at the Dow Jones again on the 15s, we can see the sharp sell-off yesterday initially on the inflation print. We paused initially between 35.6 and 35.7, a key level which we noted. And through the course of the session from about 6 o'clock, half 5, 6 o'clock yesterday, we sold off right through to the pre-market close back to 35,000. So that was a massive move yesterday. We were 35.8 and pre-market this morning we're back into 35,000. So that was a 2%, over 2% sell-off pre-market this morning and last night through the session in the Dow Jones. So a significant move there. And again, of course, if we look at the daily time frame, we have another level here at 34,800. So we're a little bit above the levels in comparison to the Nasdaq and the S&P. But again, this focal point here in the 34,800 where we bounced last Friday, we need to see does the price action try and engulf it and continue to progress lower. If so, the indices could well and truly be in trouble next week. All right. So that pretty much rounds up the kind of a few of these kind of contracts here. Then we will be back Monday for a preview for next week. But until then, have a lovely weekend.